Thank you so much for joining us. I have with me Simon Bevan, Global Head of E-Trading at ING, and we're going to have a chat about what's going on in markets. Simon, thanks for joining today. There's quite a lot going on in the market, right? What do you think is the most unusual kind of feature of this particular bout of volatility?
I think unusual is a really good word to describe this year, to be honest. I mean, financial markets is great because every year you say, surely it can't get any more crazy than it has done the previous years. But this year we started with straight into the sort of Venezuela issues. Then we had Trump sort of threatening Greenland. We had the sort of, again, America moving the war boats in towards Iran. And that was just January. And I got back thinking, wow, this is going to be great. This is the sort of world events that really move markets. We're going to start the year amazingly well. What we found, the markets were just dead. To the point we started looking at all of our pricing models. We're like, is something wrong? Are we not pricing? What's happening? And we were just not seeing the sort of client interest. Clients were not looking to trade. And that is just complete polar opposite of normal markets. So normally these sort of big events would be really, they would define your year, they would be the big drivers. And what we found, nothing. And then as soon as it all sort of calmed down, clients started coming back in again. So it's a really unusual situation where sort of, these huge events, not moving markets, quiet markets, actually great for trading. So that I've never in my career seen that sort of dynamic before. And that sort of played out all the way through January and February, where, February was really, really quiet. One of the most quiet months, again, I've ever seen in markets.
That's so interesting because I was thinking of last year, April, when there was some headline-driven surprises, you got quite a bit of volatility, right? And suddenly it's like people just disengaged. Or did you ever, I imagine you guys dug into what's been going on and what's on your clients' mind. So what do you think is causing this?
Well, that was it. That there was just no answer, and we were sort of banging our heads against the wall, sort of begging sales, please, can you tell us, why? Again, is it something? Is it our pricing? Are they trading somewhere else? Have they stopped trading with us? But the sort of only response we got was, no, everything's all fine. We like your, the sort of prices you're sending. And there was no sort of colour on why they're holding off. There's nothing. So no, I think it's just I think people are they don't really know what to do. Yeah, so they're not really doing anything. And yeah, exactly. They've been through so many years of these sort of big volatile periods. They're like, you know what, they all last a little bit, then everything sort of goes back to normal. So unless we really need to do our hedging, let's just hold off. And we were looking, is it particular sectors? Is it the corporates? Is it real money? Is it sort of the FIs? But we just saw that all over. There was no clear sort of pattern. There was no particular sector which was behaving differently. They all sort of just behaved, just had enough. And then, March happened. The sort of Iran war kicked off, and maybe back a bit more to normal times where, we're starting to see the sort of, again, markets compared to historically, they're not that volatile. Yeah. So some of these sort of DM currencies are moving similar to what they would have done over economic releases a few years ago. We're seeing maybe 100 tick move here or there, which is great at this sort of moment, but historically that's a relatively small move, really.
That's so interesting. And I actually, whilst you were telling me about these kind of unusual moves, I was thinking about something that we talked about, I think last year, about your algo and you guys doing AI pricing. And you mentioned something which really stuck with me, which was that actually in volatile times, this algo, an AI-driven algo, performs better than humans because they don't panic. Whereas, with humans, you would be like, reaction, and then, everything kind of reverting back to normal. So do you think that plays a part at all, that there are now less emotional machines out there, or could that be a factor at all?
Yes, I think is the real simple answer to that is, yeah, we can blame the algos. So from a client perspective, yeah, it's amazing. They're keeping the markets pretty stable, pretty liquid. Yeah, there's no big gaps, there's no giant moves. So in some way, great for the sort of client side of it. Maybe less good for the sort of sell side or even the hedge funds who are trying to make money from these moves. So yeah, I think so. The algos are really sort of keeping that market in check, and well, in a good way. It's a good thing, but yes.
But it's maybe generally less exciting, less kind of thrilling.
Exactly, yeah. We're sort of missing that old, some big news comes out and the market really moves and we can all sort of do something around it. That doesn't really exist so much anymore. And we see, you see these sort of non-banks, they're traditionally, it's still relatively new, where like they started in FX. They're going, do you know what, FX isn't that interesting anymore, and they're shifting towards ETFs or equities or something, and FX is just the sort of air the market breathes.
No, so it sounds like you expect this kind of subdued volatility to persist rather than a rerun of last year.
Yeah, I mean, for my personally, I don't see the markets ever really going to these wild stages that we had in the past. And I mean, we will see some volatility come back, I'm sure, but it's never going to be these sort of crazy volatilities. And we see central banks are a little bit more active nowadays. We saw it sometime, we saw it in Hungary, maybe a little bit in yen, where the central banks themselves will sort of intervene and stop these big moves and stop run on currencies. So yeah, no, I don't see us ever getting back to what it was maybe 10 years ago, where these big sort of intraday moves, these big swings in volatility.
That's so interesting. So you think central banks have shifted their behaviors as well? So they kind of try to be preventative rather than more responsive?
Yeah, it's what it feels like. I mean, I can never say for definite. I'm not in a central bank, but yeah, it does feel like that in the market, that it's pretty clear when they're coming in, what levels they're coming in, what they're trying to achieve. Where again, only a few years ago, people were desperately asking around the market, has the central bank intervened? Why has it done this? It's often the Bank of Japan, I guess. But yeah, now it's a lot more clear and a lot more people sort of shrug it off a little bit, I guess.
Super interesting. So in terms of, like, you mentioned, DM currencies, and you guys also do a lot of, Central European and any other EM currencies. Do you see any particular differences in how they behave? Do you see EM kind of behaving the same way as DM nowadays?
They still definitely have their differences, and the EM still can be a bit more wild, I suppose. You do get these gaps, and when the other day, I think it was 2 weeks ago, when the Hungarian central bank sort of intervened, the market just had this weird sort of, it was normal, then it just spiked. You saw it came back in and the market came straight back down again. But it was relatively, you could trade all the way up and down. So, sometimes your algos can get a bit, where that's a case where humans probably would have been better, where they'd have been, actually don't trade here, where the algos sort of said, something a bit abnormal's happening here, we sort of need to do something. So yeah, they're still, people call them a liquid. I mean, they're not that liquid, they're very tradable. You can trade big sizes and get out of risk relatively easy, but yeah, compared to the DM markets, they're still a bit more fun, I guess.
Yeah, I mean, let's hope they stay that way, because we don't want FX to be totally dull and boring and nobody wants to trade it. And in terms of your AI algo, which we sort of talked about, are you guys, what are your kind of plans for this year or in the next kind of 12 months? Are you doing any improvements, maybe any further rollouts? It sounds like it's a one-way, there's only one way we're going.
Yeah, and I have to be a little careful. I'm very bullish AI. I'm very pro AI. So a lot that I do, and I maybe over talk it and overhype it. But yes, we're going through model validation at the moment with a new with a new AI algo, which will, it takes all of our sort of alpha generating algos and much more smartly, is that a word? Looks at how to parameterize them, and instead of this historical backtesting, picking the best sort of parameters, now it's more dynamic and learns, and so it's again a sort of reinforcement learning algo which is constantly learning how to choose these parameters. So that will be a new one. We're looking at other sort of maybe the more sort of Gen AI stuff as well. We use a lot of these sort of tools to help us with creating documentation for model val. We're starting to look if we can use that, what they call it, vibe coding. Using.
Are you going to use vibe coding?
Well, using.
I love that.
Yeah, using some of these models to sort of create frameworks that we can then sort of get the experts to make them better. So yeah, not just in the algos. We're starting to use AI all over our sort of infrastructure, and like you said, it's a one-way street. It's just going to get more and more AI everywhere. And it is noticed as well, even to sort of the more senior level, they're saying we need to do more AI. Yeah. Maybe not completely understanding what exactly that means.
But just something.
But yeah, there's no, you can't say we're not doing AI. I mean, that just wouldn't be an answer. So there was a hackathon a few weeks ago where we got the whole of financial markets to play around. So these were non-specialists were given sort of tools to.
Excuse me. Sorry, hackathon.
Yeah, so hackathon. So we had some amazing ideas. We went around the markets. I think it was 156 ideas we got back. So yeah, it's on everyone's mind, not just ours. So AI is here to stay.
Excuse me. What else is on your mind for the next year?
One of the big topics that we talk about a lot is maybe a boring topic, but costs continue to sort of explode, and how do we sort of keep innovating, keep getting better, but at the same time our stack's getting more and more expensive.
Excuse me. Oh, the technology, right?
Yeah, as you sort of get better, the technology gets more and more expensive. So, I mean, maybe less important for us, but one of the big, I don't know if it will happen or not, but one of the things I think that will happen in the market is those costs will get so big that you'll see a bit more of a consolidation, and you won't get, at the moment we maybe have 50 banks sort of playing in this space, and that just has to shrink. So I'm quite interested to see how that will play out as time goes on. Will we see mergers of some of these banks? Will we see some of the non-banks who just have a lot more cash to throw around, sort of taking more of the market share? Will we see the big banks just become so dominant that no one else can play? So I think that's a interesting theme that's sort of happening now and will continue to happen. And then maybe a bit more practically, the sort of one area that's always sort of toying with us that it will go electronic but never does is swaps, FX swaps. And I know, in your Colin talks about it a few times. Trade tech, there'll be
swaps has been going electronic for ages, right?
But it never seems to make it. So you have these different, I think Sun, for example, futures kind of there. You had what they call it, the EBS one, FX spot, whatever the EBS one is. But they're all sort of promising, this avenue to get rid of your swap risk electronically, but it just never happens. And the desks sort of stay very voice driven. So that pressure can't keep building, and then nothing happens. So maybe this is the year, but that's certainly coming. So we're definitely preparing ourselves for that and getting all of our sort of technology and infrastructure ready for when that really does happen. And obviously, on a selfish note, I hope it happens, because it then falls into the e-world and less from the voice. So yeah, I think they're the sort of two themes. I think this year we'll start to see some of those.
So you're calling it swaps 2026?
That's it. Yeah. although it has said that 25, 24, 23. So yeah, I'll go for it again. Swaps 2026.
It's bound to come true.
It has to, exactly. I'll get there 1 year before I retire.
Well, it's really, really interesting. Thank you so much for joining us, and thank you for listening.